Well, it's our twice-a-year check-in on the big challenge between local versus offshore. Magnus Heystek with the 500,000 Rand that he's invested on behalf of our mystery investor offshore. Piet Viljoen has invested the same money here in South Africa. We're going to get an update today as we head into South Africa's election. Maybe the gurus will give us their thoughts on the way the election's going to go as well. Well, the good news, Magnus, from your perspective, after being left in the stalls, is that your horse has actually come up to the race and is only a couple of lengths behind Piet's now. But most importantly, you're in positive territory. That 500,000 Rand is actually worth more than 500,000 Rand. Must be for the first time since we launched this competition.
Yes, good morning, Alec, and good morning, Piet. Yes, as we said when we started the competition after 6 months, my horse wasn't only stuck in the stalls, the saddle and the jockey came off, and I think the jockey ran away. It was the worst possible time. I mean, the Rand strengthened, offshore markets took a plunge, and Piet was ahead by about 40 or 50% within 6 months, and everybody said it's pay all over, there's no more race. And fortunately, markets are very cyclical, and we've seen it, and we've warned people. Timing is very important in these things. You know, the sequence of returns is not predictable, and it's always not a straight performance year after year. So, be that as it may, for the first 6 to 7 months, it was streaking ahead. He had a sweet spot in the local market. The Rand was strong. And then things started changing beginning of last year, middle of last year. The technology stocks, which dropped very dramatically, almost immediately after I put some money into it. They must have heard I'm putting money into it. It's made a tremendous comeback. So since the middle of last year, June, July, offshore markets have had a phenomenal rally. Magnificent Seven have absolutely exploded. And so that's driven the market back into positive territory. But, you know, again, you have the currency which comes into play. And in a month ago, the currency was at 1940. Today it's at 1840. So those are also the things that, you know, investors in foreign markets need to be very aware of. And I say this because what's been worrying me, and I wrote it in an article on BizNews about a month ago. And like every financial services company in South Africa, every advisor in South Africa is now recommending offshore. And it's spot costs and web costs and seminars and adverts. And I'm talking about Allan Grays and Coronations and Stanlibs and 91s and smaller brokerage firms. And I've been warning that after the event is normally not the time to start telling people to take money offshore. So I've actually been telling people be careful about offshore investing. I don't think the returns that you had been earning over the last 10 years on offshore markets are sustainable. Definitely not in the American market where the PEs are very high. So I'm actually, you know, people get a bit of a fright when I say, it is not the time to be rushing offshore. Strangely enough, there's been a couple of macroeconomic fundamentals that have started improving ever so slightly. So the Rand is looking better. The budget surplus, the primary budget surplus is looking better. Eskom seems to have stabilized, but we still have the political uncertainty. And if you are still intending to emigrate or retire offshore, then go ahead. But I'm just saying the South African market, strangely enough, is offering some very good value if you're prepared to take the currency risk that comes with it. So, you know, South Africa has never been a place for sissies. If you want predictable returns, you can put it in a Swiss bank account and you will be guaranteed 1% per year over a 50-year period of time. But South African market has never been like that. So I'm just warning about the over-enthusiasm for offshore markets, looking backwards into the mirror, looking at the historical returns, which everybody now tends to project forward and say, you could have got this in the last 10 years. This is what you could get, but I say I don't think that's going to happen.
It was so interesting at the BizNews conference in London, where Sean Pesh didn't talk specifically to South Africa, but he spoke about a pendulum. And he said sometimes that pendulum swings way to the one side, it becomes a wrecking ball, and then it swings back again. And to hear Piet, to hear Magnus, the arch bear on South Africa for so many years, saying, oh, hang on a minute, maybe that pendulum swinging back again, would suggest that there's something in the air here. But looking at you've been in front. Is your horse just taking a little bit of a breather as it comes around the turn, getting ready to sprint out as we get into our a final straight? We've still got a couple of years to go, but how are you looking at things now? Given that you're at about 550,000, Magnus about 510,000, which both of which, of course, is in the positive.
Yeah, look, as a famous Monty Python said, it's not dead, it's resting. They're talking about it's not dead, it's resting. So, well, I think my fund is resting at the moment. We had a fantastic, almost a 3-year period from 2021 to 2023. And now for the past year or so, it's been going sideways and it's resting. The fact is that the client in this case has had a good return from being diversified, both offshore and onshore. And that's the whole point of this exercise, to show the answer in investing isn't always this thing or that thing. The answer is you don't know what the future holds. Nobody knows. So have a diversified portfolio which is able to cope with anything the future throws at you. And I think in this case, that's exactly what's happening here. As to what the future holds for the Merchant West Investment Value Fund, I think the valuations of stocks we own in the fund are reasonable. We're up over the past 2.5 years, which has been an extremely tough period for South African businesses. It hasn't been a great time. But as Magnus says, there are some green shoots starting to appear. And if that happens, then this portfolio will shoot the lights out. If it doesn't happen, well, then I think Magnus' offshore portfolio will shoot the lights out. So, the client does the best of both worlds. But I'm interested to hear Magnus' view, because he's been spot on in the past. And if his track record holds, then I think it augurs well for the value.
Just before we go back to Magnus on his views for the way ahead, from where you're sitting, I did ask you before we came on air what you thought the results were going to be, and you said you have no idea and you're not really paying attention to that at the moment. But surely, if there is an avoidance of a 2/3 majority for the socialists and the potential tearing up of the constitution, that would be interpreted by the international community or investment community as positive?
Not necessarily. I think there are too many small parties which are splitting the vote and creating huge confusion and just a sense of a sense of confusion, because after the election, with all these small parties, there will be coalitions, and these coalitions are messy things. They are messy things. I mean, I'm sitting here in Nisen at the moment, and I'll see the results of a municipality that's governed by a coalition of small parties, and it's a mess. It's a complete mess, and it's something that you don't want. So, my point of view is too many small parties, too many vote splitting happening for a clear outcome, positive outcome. I think it's been messy post-election. I don't know what it's going to look like, but it's been messy, and it's not a great environment.
What's a little messy is our audio at the moment. Magnus, I've been muting you when you're off mic just to try and keep the audio as clear as possible. But I'm sure you picked up all of that, of what Piet had to say. Your view on where we might be heading forward, given that it's a little bit. It reminds me a little bit of Piet of Frans Cronje, who was the arch bear on South Africa for a long, long time. And then he started changing, and he certainly says that no matter what is going to happen in the election, this is positive any way you want to look at it. I guess a little bit like, we've gone so far down. We have priced for Armageddon. But Magnus, how are you reading it?
You know what? As Piet always points out, and I think it's very wise words, we don't know what the future holds, and we all try to predict a future which invariably is either extremely good or extremely bad. It depends which where you're coming from. But the world, especially the investment world, is not the bipolar world. There's always something that happens that changes the dynamics, whether it's a COVID virus or an earthquake that blows up a nuclear reactor in Japan. There's just so many variables, and one must be very careful that your ego, once you have been right for a while, takes over, and you think you're now the master of the universe. I know how this thing works. And that's when you normally get the big club. That's when life reminds you that life is unpredictable. And so you always have to almost, although I, for a long time, formulated a view of markets which was not anti-South Africa. I need to stress that, Alec. It was not anti-South Africa until about 2016. It was pro-US and pro-NASDAQ. It was because there were significant things happening beyond our borders, which was not available to South African investors. That was the first leg of the offshore positioning. Come 2016, 2017, when we started seeing the downgrades coming through, the grey listing, etc., that became a South African issue. The big question in my mind was, in that time, how would the things like the downgrades of our international credit from 2 above investment grade to 3 below junk impact our investment markets? And I took a view, it's going to have an impact, and we've seen it subsequent. The outflow of the foreign capital has been pronounced and consistently for over 6-7 years now. 1.6 trillion rand has left the country. So that there might just be a trigger. Eskom is starting to produce better. The ports apparently are starting to declog or unclog. And you just need a little bit of relief on the interest rate cycle, which is strangling most businesses and consumers. At some point, there's going to be some kind of a relief. And this is normally where the smart money starts looking at not what happens next week, next month, but looks at what happens 2 to 3 years from now. What is happening with Pick and Pay? Is that a value proposition? What is happening with the very cheap banks that we have? And that's just the part of the game. But that doesn't change the overall trend of my advice. If you are intending to immigrate or going to visit a lot of your grandkids offshore, you've got to have a substantial portion of your cash in dollars, which is going to be paying for dollar price stuff. And that argument is not going to change. It's just a question of timing. When do you go and buy those dollars? And again, almost unpredictable.
Well, it's interesting to hear that, Piet, that Magnus is feeling as though South Africa might have its turn. Now, I want the two of you to just guide us. We have BizNews model portfolios. We've done incredibly well over the past few years by following the exponential company philosophy. But even I've got to pinch myself when I see NVIDIA going up 250% in a year. That's it. That's a big part of our portfolio. I sold half of them at $800, and now it's at $1,100. So it's just one of the, and that was only a month ago. So the volatility that one's seeing there. If you inherited the BizNews model portfolio, which is primarily invested in these exponential stocks, what would you do with it?
Look, I can only speak to the fund I manage, the Worldwide Flexible Fund, which is a fund that invests in any asset anywhere in the world. And I would take that portfolio and replicate that. And that portfolio is about 80% offshore, 20% onshore. It is underweight the US stocks, overweight the UK, overweight emerging market stocks. In the equity portion of the portfolio, it has 25% allocation to hard assets, gold and other hard assets, and at 25% allocation to emerging market bonds, which are yielding quite nicely, amongst which South African bonds, and 25% into cash, because this is a portfolio that does not try and forecast things. It just tries to present a robust face to anything the future might throw at us. So that's what I would do with that portfolio. But that's me. I think getting back to our little competition here, what Magnus says is right. I mean, this always portrayed as me being 100% in South Africa and Magnus being 100% offshore. And I think that position can never be the correct position. The correct position is somewhere in between, because all of us have offshore liabilities and onshore liabilities, which we have to match with our onshore and offshore assets. And each person's profile will be different in that regard. And a good financial advisor like Magnus, Brent's Wealth, will advise people as how to put that together. But you need both. You can't have one or the other. You need both. And I think, as Magnus quite rightly points out, right now, given what's happening in the background, which people are not talking about yet. I mean, Magnus highlights the ports, the railways, the power. Those things seem to be improving at the margin, but we're not talking about them yet. And once people start talking about them, and once you see the effects of the marginal improvement, at least, of these economic constraints, once you see the effects flowing through into the income statement and balance sheet of South African companies, people could start getting quite excited about the earnings power available at very low multiples right now in the South African market. So that could still happen going forward.
Before we go on that side, you said 25%, did I hear you correctly, in
Yes.
precious metals?
Yeah, hard assets.
Explain that approach.
So, the portfolio is built to withstand inflation or deflation, growth or disinflation, contraction, and hard assets, primarily gold. It's got about 20% exposure to gold. Primarily gold gives you protection against an inflationary environment. Now, I'm not forecasting an inflationary environment. I'm just saying that if we were to go into an inflationary environment, that portion of the portfolio would protect you, where your one portion of the portfolio would not do very well. So it creates a reasonable return with low volatility. And I think that's what people want when they've already made their money and they want to stay rich, not get rich. I think the business portfolio is more of a get rich type portfolio, which is, that's fine. But this sort of portfolio is more all portfolio.
That portfolio, you want to stay rich. You've gone from $200,000 to $600,000. You want to hold on to those $600,000, not lose them. And I think that's...
I guess so. I mean, but one has to make the point that investing is explained through the rearview mirror, but it happens through the windshield. So if you can extrapolate those returns in the future, yes, that's true. But I don't know if you can or not. I'm not saying you can't. I'm just saying I don't know.
I don't think you can. I mean, 20%, that's Warren Buffett type returns. It's certainly not for some reporter to get, to have a little fling here and there. That's for sure. Magnus?
I mean, Piet is 100% correct. One must always distinguish between a fund advisor, someone who runs a specific fund with a specific mandate, and many people forget the importance of a mandate. Piet has a certain mandate, and you've got to stick to that. Now, I'm a financial advisor. My mandate is looking after the clients. I'm coming from a totally different approach. And you'll be surprised to hear that we often find investors where we recommend zero offshore exposure because their personality type does not allow for any kind of volatility. And we put people through a psychometric test to see what kind of reaction they will have if there is market volatility. So we have a good idea that Mrs. Sunny van den Berber, who comes in and she says, I want to take my money offshore. You say, hang on a second. Did you know that offshore markets and a strengthening rand can drop your portfolio by 40% in 6 months? And if she reacts negatively to that, you know that you cannot take the money offshore. And then you go for something else, which gives you much more predictability. The second point is, again, we come back to Piet has a certain mandate to run a couple of funds, and this applies to all fund managers. Financial advisors need to look at the whole spectrum of investments that are available. And you will get clients who want a very large exposure to gold, especially in the last couple of weeks and months. Or you want someone who wants to speculate aggressively into NASDAQ or the Magnificent Seven. There's no golden rule, and that's the point I'm trying to stress. There's no golden rule as to how you should invest your money. It's the end product of a fairly lengthy and a very detailed analysis and discussion with the client before you can recommend something to that client. And only then can you roll out that strategy. So it's a bit unfortunate that this competition is seen as an SA versus the rest. And I think the educational value of this competition is exactly what we're going through. It's not an all or nothing thing.
Yeah, I like that. And in addition to that, Piet has also said a while ago that when we spoke about crypto, well, put 2% of your portfolio in crypto, which I listened to, and we did that with our shift portfolio, and it's now 6%. Isn't that nice? And it could have gone to 1%. Doesn't really matter. But having that insurance, so you've actually enjoyed the ride on crypto. Final question, Piet, because this is really the precious metals side is something we haven't spoken about much in South Africa for a long time. They've been out of favor for a long, long time. If you've got 25% there, are they in physical or in shares?
Yeah, it's mainly a physical, although unit trust regulations don't allow you to have more than 10% in actual physical ETF, gold ETF, or physical other commodities. For some reason, it's seen as a risky. You're allowed to have 20% in Nasdaq, but you're not allowed to have more than 10% physical gold. That's one of these quirky rules in unit trust. But so what I've done is I've added gold streaming companies, which are businesses that effectively earn a royalty from gold mining companies. So they take a percentage of the top line revenue. So they are as close as you can get to the physical. There's almost no operating costs or capital expenditure between you and the gold revenue. So I've augmented the physical gold with gold streaming businesses as well, plus a bit of uranium and some oil streaming businesses as well. So as far as you can get close to hard assets.
Fascinating insights. Thank you to Piet Viljoen and Magnus Heystek. Just to remind you that the competition is a real thing here. We have a member of the BizNews tribe who gave each of the gents R500,000. That in Piet's case is now worth 550,000 Rand, and in Magnus's case is worth 500 and
more.
A bit more than that. Well,
he's been a
beginning
fantastic
of
month.
May.
Yeah.
Okay, so maybe 600,000 Rand. But the latest update is that you're in front. Magnus is now in front after a very rocky start. They found the jockey. They put him back on the horse. They let him go. He's chasing Piet's. But Piet's horse at the moment is doing a striker straight and have a little bit of a breather halfway through. There's still a couple of years to go in this competition, which is a 5-year contest. But the primary message that we've been getting now is it's not all or nothing. It's all about diversification. And if there's one thing that you would have learned from the way that this competition has unfolded in the past 2 years, it is that you don't want to have all of your eggs in one basket, even if you're watching that basket very closely. I'm Alec Hogg from BizNews.com.